This is the FM Gold channel of All India Radio. In the program Money Talk, now we bring you a dialogue on foreign direct investment in pharma sector. The participants are Jagannatham Tunuguntla, economic analyst, and Jaimini Kumar Srivastava, business news analyst.
Mr. Jagannath, foreign direct investment in the pharma sector has been almost doubled during the April-August period. How do you look at it, and what has been the trend so far now?
Before getting into that, I'll largely explain the relevance of pharma sector and relevance of FDI as a concept and try to link it both. As a pharma sector, a country like India, huge population, we are in dire need of healthcare as a theme, and then many Indian companies have grown to very large size. But having said that, pharma is very R&D driven, that is research and development. Lots of research has to be done, many patents have to be found, and in that aspect, many global companies are far ahead because they spend billions of dollars to get that R&D ready. So as India, considering that we have a huge population base, we need the sort of support from the global players as well to get that R&D. How Indian players, traditionally speaking, how they have positioned themselves as generic players, meaning thereby a strong manufacturing base with the patent support given by the foreign players, because foreigners concentrate on the patents and any patent is meant for a particular period of time. Once that is done, Indians get into the manufacturing base of it, and many Indian companies have grown to much larger size. Now the question comes about FDI, because in a globalized world where every economy is integrated, interrelated and interdependent with the global architecture, we can't live in isolation. That's a hard reality. True. In that sense that, and moreover, Indian companies in general and Indian pharma in specific is in dire need of capital as well. In that sense, the foreigners are more than keen to put money into Indian companies. So the foreign direct investment into pharma, that's why it has been an uptrend. Generally speaking, the reaction to the pharma and FDI has been mixed. There is no specific trend as such. There were some companies where FDI has invested. It has proved to be big benefits for them, and in some cases the delivery has not been up to the mark as per their expectation. Case in the point is Daiichi investment into Ranbaxy. It has head into many legal and regulatory issues. Daiichi kept claiming that they got a bad deal, so that's a different matter.
But there are two aspects actually, legal and takeover related issues and the business part of it. You mentioned about the increasing interest of foreign players in Indian pharma sectors. India itself being a major player as far as generic medicines are concerned. Otherwise also a sizable part of medicines is being exported from India to different parts of the world. What exactly is the interest, according to you, is of the international investors in pharma sector, because of the fact that it has got a huge market domestically, and also because of the fact that internationally the Indian companies have a lot of scope to expand their business?
It's both ways. It's both inbound as well as outbound. One way is that the foreign players realize that India has about 1/6 of the world's population, meaning they have a huge market buying standards. And moreover, Indians' paying capacity has been increasing, meaning thereby now Indians openly can afford the costly medicines, and which historically has been a major challenge. So they realize it's a huge market in a sense. And the second aspect is the manufacturing base that India has and the low-cost manufacturing opportunity that India has. And it's other way around as well. That means the global players are good in, say, R&D, and India has market plus manufacturing base.
In fact, R&D you have been mentioning, that is also quite cheap if it is done in India, and many such jobs are outsourced to India. There are laboratories which have been operating in India and doing R&D for different companies.
True.
Including pharma.
Yeah, just the case in the point is when the R&D discussion came, the company like Pfizer, a US company, the amount of R&D spend they make every year is about 7 times that of the total value of Ranbaxy. That means they spend billions of dollars, and they very well know that most of the money can go waste. Why? Because after doing it, irrespective of your hard work, at the end of the day, it may result into zero result. But they are ready to do, because they know even if 1 out of 100 trials go for a successful product, they can make 1,000 times returns what they have invested. But whereas Indian companies, either because of ability to spend that kind of money is a major challenge, or sometimes willingness is a major challenge, Indians have preferred themselves into a frame of generic medicines. Gradually, the companies like new companies like Glenmark Pharma, and these people are spending a lot of money, Biocon, and these companies are spending lots of money on R&D, but nowhere in comparison to the global standards. So in that sense, probably India has to do a lot of catching up in the R&D. I think the FDI proposals, again getting back to that, money is one side of the story, but I think money is not necessarily the only thing that for which the whole concept is worked out. I think it has a lot to do with the back and forth of R&D and the marketing setups. Money being just a coincidence. I don't think that's the key that is driving the whole thing.
That's the issue I just wanted to come, because do you essentially feel that India pharma industry or pharma sector has required investment for the sake of expansion of its business, or it really did not require it? It is more to boost the economy as a whole that the government is promoting foreign direct investment in pharma sector, or is it essentially because of the requirements of the pharma sector in the country?
Government has always been supportive of FDI. If you see last 3-4 years of their approach to not just pharma, I'm talking about in general, but pharma in specific, if you see, they don't mind for a greenfield, and because that will create lots of employment opportunities in large ways. Just the whole discussion is about the brownfield, wherein the companies coming and taking the stakes in the existing companies, meaning thereby the money will go to the promoters of the companies and not necessarily it will create a new job as such. So that is where the, if at all, any little bit of different views are emerging. But while it may be true to some extent, but in a globalized world, when the global trade is happening, India should not live in isolation. I think while it's fine to create some conditional kind of FDI permissions, but stopping the brownfield FDI altogether, I think probably sometimes may be counterproductive to the whole concept of the employment generation and the money flow.
But there is a concern, and that is about increasing acquisitions of domestic firms by multinationals. One thing is understandable with the arrival of multinationals in Indian pharma sector industries, and also the partnership and other such business-friendly activities, the competition will increase. But there is also a lurking danger of some of the small players in the market losing the ground and ultimately, succumbing to the pressure. In that scene, do you think that the major issue is of the pricing of the drugs? And India is facing a challenge, and that is why of late there is a discussion time and again that the medical professionals should prescribe generic medicine instead of branded medicines. So what will be the scenario if this kind of promotion goes on? I think ultimately, who will be the loser?
You said it well. I think one can draw the parallel with FDI and retail as well. Exact the same concern in FDI and retail as well. But when any economy is evolving, I think you can't live in isolation. You have to create that all the back-end infrastructure. One way of looking at the whole thing is, let us remain as we are and let's get into the protectionism mode, and then wherever there is, let the world level of the R&D take the 90% of the cake. Let us be the manufacturing hubs, taking the 10% of the cake. Otherwise, take the things head on and then try to integrate the whole thing, and then maybe we increasing our stake in the whole pharma ecosystem, maybe towards 25-30%. I think in the case of retail, we have by double it. I think in case of pharma, already we had any which way taken the stand of getting towards the FDI. Now I think going back, I think probably send a wrong signal to the global community. But having said that, putting some conditions in the brownfield pharma may be invited in such a manner.
That is what the Commerce and Industry Ministry is proposing, to take steps to tighten the FDI policy for the sector, because there is a reported rush of multinationals to acquire Indian pharma firms. But as you said, that R&D, research and development, is the key issue, where a lot of investment is required, and perhaps our pharma industry may not be essentially equipped. So generally it is taking advantage of the R&D work of the multinationals or other foreign companies and further working on them to produce medicines. So in that situation, do you think that our companies, even if do not get foreign direct investment or partner with foreign players, will be in a position to negotiate 50% or more than that, because they are the hub of manufacturing because of low cost of production, labor and whatnot?
True, but as you would appreciate, R&D is the real key. Manufacturing is beyond a point, is like a commodity. And if India can play the card of manufacturing to some extent, but you know that the negotiability power is always with the brain, not necessarily with the hands, meaning thereby the person with R&D who has the brain capacity, he will be in a position, because he'll say, if that's the case, I can move to some other country in the world where there is a manufacturing setup. For instance, just as a discussion came, for example, the Apple products which are globally popular,
yes,
entire designing happens in US. Entire manufacturing happens in China, and China gets only 10% of the cost of Apple product, whereas 90% is taken away by the US people for the designing they do. That's how the global dynamics and global economics work.
But that brings the point, will it be ultimately in the interest of the country as a whole, the consumers, which are huge given the kind of health problems which we have been facing with the changing lifestyles, and rising cost on healthcare, which is also a point of serious concern, and the business part of it. As you say, 10% is kept by China, it goes to the host country, and rest of the most of it to the R&D source country. So as a business equation, globalization of economy and the other things, it sounds very interesting that investment is coming. Is there any serious analysis, or you say that it's 50-50 foreign against argument for foreign direct investment?
I think at least as of now, no trend was seen in such a manner to really detrimental to the whole issue. That's where the finance ministry is coming. As we had seen 3-4 months back in August, when RBI had raised some foreign money related issues, even the condition was very minuscule condition. It has raised such a big eyebrow in the global community that India may be getting into protectionist mode in the whole scheme of things. While India has every right to protect the local business. For example, in case of FDI and retail, they come out with a state level permissions, and they have come out with what kind of local sourcing should happen. They created what kind of employment should be created. I think those kind of conditions are permitted, like say what kind of employment opportunity should be created with this foreign money. I think probably that will create an environment where it may be a win-win for everyone. But I think when the money flow is so much happening in the world, eventually at some point the barriers will be broken, because what I've seen historically, not just in Indian history, any history, you can stop the money flow only for some time with regulations. If the money flow is interested enough, I think it will come in one form or another.
How is it showing in the stock markets?
It's a mixed reaction. I mean, for example, there were some successful, of course, and there were ran back saying it has left bad taste in the mouth of the Japanese players, still complaining about due diligence. But fact of the matter is, in any multi-billion-dollar acquisition, everybody knows that the acquirer should have been a little more diligent. I mean, you can't complain after the deal. And moreover, it is yet to be proven went wrong. I mean, it is just a matter of acquisition as of now. But having said that, I think there will be players who may be interested globally for sure, who would like to take stakes in India. I think maybe they would like to start with partial stakes, may not be 100% takeovers, maybe say 20-25% kind of stakes, and test the water and see the whole experience, and then eventually may take towards that. I think that may work for India as well. I think India may be a gradual permission of takeover of the companies instead of outright takeover. It works both ways.
India allows 100% FDI in the sector through automatic approval route in the new projects, and through this there has been a rush, as I said. But now already, even before we could explore in its entirety the scope which it provided, this provision, we are already talking of having some restriction put in place. Do you think it is going to have some kind of restrictions on flow of investment? Though you say that if the money flow is there, it's very difficult to check it for a time.
It's a more a case of supervisory approach, in the sense, I mean, keeping it in a watch. I think that doesn't mean you are restricting it, and what you are saying is you are supervising it, in the sense, and how it is happening. Is it getting into a detrimental to the interests of the local players? I think maybe playing a diplomatic somewhere in between kind of zone. I think commerce industry has a point. At the same time, finance ministry also has a point, because finance ministry is worrying about the global positioning in terms of the brand image, how it may work out if you really get into the conditions and restrictions. At the same time, commerce ministry is thinking about the local players. I think it all boils down to the same thing as it happened in the case of FDI and retail, but my experience is that probably eventually it will be permitted, maybe at max subject to some conditions.
One of the mandatory requirement which is being talked about perhaps could be as part of some of the musts to be taken care of by the foreign direct investment companies in Indian pharma sector is to make a mandatory investment in R&D, and to that effect there may be some kind of a clause also.
Exactly. As we discussed in FDI and retail, it was a local sourcing, and in case of its R&D, because India absolutely knows about the R&D relevance, and then they also know that the foreigners are slightly ahead in terms of the learning curve, and India should be taking advantage of that. India should not be fearing, because if they fear for long, I think we may actually left behind in terms of that learning curve. There will be some other country who may be smacking its lips to take the advantage.
Thank you very much, Mr. Jagannath.
You were listening to a dialogue on foreign direct investment in pharma sector. The participants were Jagannatham Tunuguntla, economic analyst, and Jaimini Kumar Srivastava, business news analyst. It came to you in the program Money Talk, produced and presented by the News Services Division of All India Radio. This program is also available on our website, news.on.air.nic.in. You may email your opinion about the program at airnsdtalks@gmail.com.